War of words taking place on Twitter. President Trump sending a message to Iranian President Rouhani saying, quote, "Never ever threaten the United States again or you will suffer the consequences." Oil prices closing in the red for the day despite that threatening tweet. What could all this tension mean for the oil market? Let's dig deeper into this with Bob McNally. He's the founder and president of Rapidan Energy Group, also testifying before the Senate Energy Committee tomorrow in a hearing to examine the factors that impact global oil prices. That's sure to include the latest on Iran. Bob, good to have you here.
Nice to be with you, Michelle.
Why do you think oil's lower when you see the saber rattling by the president?
You know, I think the market's a little complacent. And maybe they're thinking this is a repeat of North Korea. The president will tweet about fire and fury, and before you know it, the president and President Rouhani will be in Geneva having a meeting and talking about a deal. It could be that the macro risks, the trade disputes, the strong dollar are overweighing, kind of weighing heavily. But I think there's complacency out there. The president's tweet followed a statement by Iran's supreme leader. And he kind of said, look, if we can't export from the Strait of Hormuz, nobody can export from the Strait of Hormuz. Now, when you talk about Iran's exports, that's about 2.5 million barrels a day. But if you talk about interrupting Strait of Hormuz, that's 19 million barrels a day. That's the world's most important choke point. About 30% of seaborne traded oil goes through that strait. So that's a much bigger problem.
Yeah, it's the channel between Oman and Iran. We're showing people right now a graphic that we have created, particularly for today, to show where the Strait of Hormuz is and how important it is. Admiral Stavridis was on earlier today. I'm sure you know of him. And he said, yeah, OK, if they shut it, we'll reopen it in 2 to 3 days. That doesn't mean we're going to have that it won't be messy out there, that we'll have interactions and military interactions. But ultimately, the flow of oil will continue, even if they do shut it for a couple of days. Does that not sound like we shouldn't be worried about it?
No, I mean, it's true that the United States military is going to prevail against the Iranian military in a conflict. I'd be a little careful about 2 to 3 days. I was on the National Security Council when we liberated Iraq, and we looked at scenarios like this as well. I think we have to be a little bit careful. If the Iranians got the jump on us, and they were able to sow mines especially, it could be several weeks before it's safe for commercial ships to pass through. We will prevail in an all-out military conflict very quickly, but cleaning up the strait, getting insurance companies willing to insure those ships going through, that could take a little more than a couple days. Matter of fact, if the market thinks it's only a day or two and it lasts a week, there could be a rude shock. So, yes, we would open that strait. Iran can't keep it closed, but it could be a longer affair than folks are thinking about.
So unpack some of the rhetoric here. If Iran moved against the Strait of Hormuz, it's pretty clear that that would be an act of economic war. But who is threatening economic war on whom here? Or are both sides doing it?
Well, we are threatening economic war on Iran. We are threatening basically to strangle them. Secretary Pompeo gave a very forceful speech last night at the Reagan Library in California, and he repeated the administration intends to drive Iran's oil exports to as close as possible to zero, and then repeated zero for emphasis. That's sort of like what we did to Japan before Pearl Harbor. We economically strangled that country and forced them to make a choice. In the case of Japan, get out of China or fight. In the case of Iran, it's change your behavior, stop supporting terrorism, agree to a decent nuclear deal, or face slow strangulation. When you back a country like that into the corner, there has to be some risk that the country will lash out, even if it's against a bigger power.
So do you think, Bob, that the likelihood that Iran moves to close the Strait of Hormuz is low, and that's what oil prices are telling us today? I mean, how do you interpret this move?
Again, I interpret it as the market thinking it's just a lot of bluster from both sides. We saw that with North Korea.
Do you think it's just a lot of bluster from both sides?
No, I do not.
Okay.
I think that if Iran is pushed to the wall, they will have to raise the risk. Let me say this. In 2012, they were enriching every day, and oil was $100. So they had leverage over President Obama. Now Iran has no leverage. They're not enriching, and oil is $67. So Iran has to at least insert the threat, and I think it's a credible threat, to the Strait of Hormuz, get that price up, and get President Trump to want to do a deal.
So how high could oil prices go in that worst-case scenario?
Well, I think we would be measuring the increments in $5 to $10 a barrel if we were closing that strait for more than several days, if it wasn't just a 1 to 2 day affair. And the key thing there is whether Iran, again, can move first, whether they can get those mines into the water before we can stop the boats, because that turns a short-term affair into a longer-term problem. we're going to get it done, but it's more like several weeks.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.